Good day to all. Thanks for attending Cannasure's second webinar in 2022. We promised that we were going to be very visible, educational, and share as much information and knowledge and program updates as we possibly can. So here's number 2 and a sneak peek of number 3 coming up. We have actively been working on our MGA flagship program and have our reinsurance renewal coming through, where we're working on a bunch of different coverage updates, enhancements, hopefully some capacity, expansion, and that will be the main topic of webinar 3, probably late April to early May, depending on the timing of our reinsurance renewal conclusions. So that's exciting for us, but today is more of a risk management focus. So risk management, claims activity, and the overall cannabis industry. Everyone who's registered has seen our stellar panel that includes Stewart, Kieran O'Rourke, and Lyn Baer. They'll share their cannabis industry experience in areas such as legislative and regulatory insights, claims information, and some keen insights on lighting, as well as other risk management topics that will be handled by Lyn, Kieran, and Ian. However, we're going to kick off today's seminar with Adam Billiter from Great American. Adam is going to speak on behalf of Great American's builder's risk appetite in the wonderful world of cannabis. And before we hand the mic off to Adam, wanted to remind everybody at the bottom of your Zoom screens, there's both chat and Q&A buttons, which I'll be monitoring throughout the presentation. Please, as questions come up, zip a note into the either bucket. We'll try to do some answers live, and then at the end of the presentation, we'll have a full Q&A session to make sure that we've caught as many questions as we possibly can. So with that, Adam, please take it away, and thank you so much.
Thanks, Jim, and welcome everyone from tropical Cincinnati, Ohio. Here at the corporate headquarters of Great American Insurance Group. As Jim said, my name is Adam Billiter. I am a vice president in the Property and Inland Marine division, which offers a variety of products, one including builder's risk. We've recently contracted with Cannasure to have access to our builder's risk products through working with Cannasure. So I wanted to just give you a little bit of an idea of our capabilities in this area. I am not a cannabis expert. We've done some cannabis projects in the past, but builder's risk projects are builder's risk projects. And we understand that in the marketplace, there's still somewhat of a stigma here that everyone's working to overcome. And we wanted to make sure that we partnered with Cannasure, with their expertise in their area, to also give you a product for your builder's risk project. So next slide, please, Dana, if you can. So we have a few different areas that we can help. From a new construction standpoint, we have some varying capacities, as you can see on the screen there. Frame 7.5, joisted masonry up to 20, non-combustible that are up to 150 million. So pretty wide variety there, depending on what types of construction your customers are seeing. Rates will vary based off of geographic areas, based off of some elements at play at the builder's risk. But in general, those are the capacities that we can offer. For renovation that includes the existing structure, if it's a renovation that doesn't have existing structure coverage, say the existing structure is covered somewhere else, we'd consider that more of a new construction area. So, but if you do need the existing structure, we can have different capacities there. As you can see, it just drops down a little bit on the frame capacity. Frame construction, as you know, is a little bit more susceptible to loss. So where thresholds there are a little bit lower. So next slide, please, Dana. This is a good kind of representation of a map. We do work in all 50 states, but there are some problematic areas, if you will, from either a convective or coastal storm exposure. So in general here, anything on the map that's going to be blue or green, we shouldn't have any issues with. When you start getting into the yellow, orange, and red, you may run into some wind issues there, where we would either have to exclude the wind or do some sort of significant wind deductible. Most of what we're targeting in the builder's risk space is going to be in those blue states. And my understanding, a lot of that encompasses a lot of the people that we're talking to today. But again, we write in all 50 states. We have capabilities in all 50 states. Next slide, please. So a few highlights of what we've got. So we have a dedicated underwriter that's going to handle everything for Cannasure. So they're hopefully building some expertise there. We have a quick turnaround of quotes. If any of you ever work in the builder's risk world, you know that the contractor calls you when they're either on the job or they started the job 2 weeks ago. We're ready and capable to handle that. So, the better information we have, the quicker we can turn it around. But we can work in those kind of, 24-hour turnarounds if you need them. Ideally, we get as much time ahead of time as possible if we can, but we can quickly turn those around. We don't require any specialized applications. We'll take the information however we can get it. So you send it to us, we're going to comb through what you have. We're not going to just shoot you back a generic app and make you send us all the same information. So if it comes in a detailed, PDF and SOVs, we love that. If it comes in on a bar napkin, we'll figure it out that way too. Extensions and cancellations, everything is prorated. So if it's a 2-year policy, we'll write a single shot policy with a 2-year term on it. We're not going to make you write a year and have it renewable and then jack the rate up at the renewal. If you come back, if you work in construction, that there's delays. And that could be now, supply chain delays. It could be due to lack of GC support or even just getting inspections for your permits. Those things happen in a typical construction project. So if you come back to us and, they're delayed 2 weeks, we can prorate that 2 weeks. If they're delayed 2 months, we can prorate that 2 months. Our intent, whenever we take on a project, is to see the project through. So as long as construction is active and continuing, we'll continue to extend as much as we need. If you come to us and extend a week at a time, we might say, maybe let's look at a month, then, but everything is prorated. And again, if they finish early, which does happen from time to time, we'll cancel the date that they're finished and return a little bit of premium there too. So everything we do is prorated. There's no minimum extension, minimum earned, anything like that. As I said earlier, we are a specialized carrier. If you're not familiar with Great American has a number of different specialty divisions. And think of Great American as kind of a grouping of a lot of different specialized companies. So here in property and marine, we have our own claims team that only handles property and marine claims. We have offices in Cincinnati and Colorado. So those adjusters are familiar with this type of work, familiar with builder's risk, know it in and out and look at it every single day. Same with our products people. I think we have a very competitive form in the marketplace. We have a really big presence of builder's risk. And our forms are developed for those builders risk clients. One thing I do want to point out right now, we're not looking to get involved in any operational exposures, if you will. So if you do have an operating cultivation facility and it is going to remain active while we're doing work inside, that wouldn't necessarily be something that we'd be able to help with. We want to look at that new ground up or that existing with renovations, if that's a completely vacant structure that's undergoing renovations. If it's an addition adjacent to an operating facility, we can look at that a little bit further, but that's all kind of going to depend. So just wanted to put that out there. I saw a couple of things come through in the chat, so I just want to address those. I know Jim's going to have a Q&A at the end, but a couple easy things for there. So question from Carla on dispensaries or grow sites. We'll do either or. So we've already quoted a few for Cannasure. Some of them have been grow facilities. I believe some of them have been dispensaries, so more retail facing. We've got the other one. Unfortunately, we don't have liability with this. This is just a straight builder's risk project. Limits changed. It all kind of depends on the project. That's what we're up to in general. But as you start to get in that 7.5, there's going to be a lot of factors that come into play that we're going to look at as far as acceptability. So just because it's under that threshold doesn't mean it automatically applies. So some of the things we're looking at a builder's risk, as much information as you can get on the structure itself. What's the structural elements made of? What's the construction type? I've seen a lot of apps come through where it just says non-combustible. The more you can take that further, the better, because sometimes it's better construction than just a straight steel non-combustible. So if you have plan sets, anything like that, please send those along. That'll help get you the best rate and the best products for your customer. And then obviously information on the general contractor. That's one of the biggest things we're going to underwrite. Who's the general contractor? What's their experience? If they don't have a lot of information about them available, please provide some details that you have about their experience in that space. Couple other quick questions here. Submissions should be sent to Cannasure. Cannasure is going to run the point on those and serve as the intermediary there. Typical or older frame, non-sprinkler, that's going to be tough. So, but again, it just kind of depends. on what we're looking at, what's the size of it, how much work needs to be done. There's a lot of factors there in general. So again, a quick and dirty, Builders Risk, pretty straightforward line of business. Ian, Lyn, and Kieran are going to talk about some more interesting topics, I'm sure. But Jim will have a Q&A session at the end that I'm happy to answer any questions. I'm very excited about this opportunity to work with Jim and his team. We've already seen some great opportunities come across, and we really hope that we can find a nice niche for all of us to help you get this small portion of the overall product placed for you. So Jim, thank you.
Thanks, Adam. And to Leslie's question, that possibly was a submission prior to our very new relationship with Great American, Leslie. So you'll see my contact information at the end of the presentation. If you could please resend that to me so we can take a look, and Adam and Nathan and I can make sure that we're taking a look at that with our current eyeballs instead of our old product eyeballs, which could have been a different marketplace altogether. And there's a couple other questions that we'll probably leave to the end. And Adam, truly appreciate your time there. Let's hand it off to Ian Stewart from Wilson Elser and all the other attorneys behind the name of that awesome firm that's very active in the cannabis space. Ian, thank you.
Yeah, thanks, Jim. Thanks, everybody. Excuse me. It's great to be here. I thought what we do today, because we only have a fairly short time to talk about the regulatory and legal issues, is to focus what's happening in Washington, or we should say what's not happening in Washington, and then on some high-level matters that will impact, hopefully, the broad cannabis industry nationally. There are a number of lawsuits that are coming out now. We've had a long enough time period with some of the states that have been active with adult use of medical cannabis, particularly out west here, where cases are now making their way through the courts. We're seeing jury verdicts. We're seeing more tort law being made compared to, certainly even a year ago. But that's a little bit more granular. So we're going to keep it a little bit more national in scope. And Dana, if you could just advance the slide. So in Washington, the bad news is that, compared to what we thought after the election, nothing has really happened. And I don't think we should expect anything meaningful to happen before the midterm, certainly. Safe banking still remains the most likely. The most recent development with that was that it was added to a recent bill that passed the House again. So I think it's 6 times now that Safe has passed the House, has never had a vote in the Senate. And Ed Perlmutter, the Democratic congressman from Colorado, who has been the primary champion of safe banking, is retiring at the end of his term, and has recently announced that he's going to make every effort to try to get a vote on safe. We'll see. And I think that the biggest challenge now has shifted from, I think what people could reasonably say was a primarily Republican obstacle prior to the election to now really being primarily a Democratic obstacle in terms of the strategy for legalization. Do we take an implemental approach through bills like safe banking, or do we take a broader approach through full federal legalization, incorporating particularly social justice and social equity issues? And I think that there are certain Democratic senators that are really insisting on that before allowing a vote in the Senate. And so that's really what's been holding things up. So also, of course, every few months we have major events, and we've got Ukraine, and we've got COVID, and we've got all these other things that are just occupying attention in Congress. So in the meantime, we still have to look at the states. Let's advance the slide. And, we have seen the geographic expansion continue, and, this is post-election, but we've got now looking forward, adult use legislation being considered in a number of states that are listed there on the screen, and adult use ballot initiatives. The one state that was supposed to have had a ballot initiative is Florida. That did not survive a legal challenge recently, and that was taken off the ballot. But I do think we'll see additional adult use and medicinal states for the as a result of the midterms, and that will continue to create a further erosion, particularly within Congress, of significant obstruction of legislation, because the more congressmen, of course, and Congress ladies that are representing adult use and medicinal states will have pressures from their constituents. Next slide. So in the meantime, let's talk about a couple cases. These two are related cases that are being heard by the U.S. Supreme Court, and we should expect a decision in the next few months. And they've flown a little bit under the radar. I mean, I think some of you probably have heard of these, but in particular, the Musta v. Mendota Heights is the lead case. This involves workers' compensation insurance, and I think, mistakenly, I think the insurance industry has said, well, it's workers' compensation, therefore it doesn't really pertain to, my portion of the business, or it's kind of limited in scope. I think that's a mistake, and I disagree with this. I think this is going to be a very important decision, not only for the cannabis industry, but specifically for cannabis insurance. And the reason is because we now have a strong split between multiple states. We've got New York, New Jersey, and Connecticut, which have all held through court decisions that reimbursement of medical marijuana is required under those state statutes. And then we've got Florida, Massachusetts, and now Minnesota, which have said that it is not permitted because of Schedule I issues. And I think coming out of last summer's commentary by Justice Thomas, that many of you may have seen some news that in July or so of last year, there was a denial of a writ petition to the U.S. Supreme Court on a 280E case, the portion of the tax code that disallows cost of goods, standard deductions other than cost of goods sold for cannabis businesses, which is an important issue. But the Supreme Court just said, we're not going to take that up. And Justice Thomas didn't have to say anything. There was no reason why he needed to say anything, yet he chose to put out about a 2-page statement in that writ denial, where he made his comments pretty clear. And he's not necessarily in favor, I think, personally, of commercial marijuana or the cannabis markets, but he is a big champion of federalism, and he's saying this is not working. And his quote within that statement was really powerful. He said, "A prohibition on intrastate use or cultivation of marijuana may no longer be necessary or proper to support the federal government's piecemeal approach," meaning that I expect in this decision that's going to come out now, that now we've got the full Supreme Court that's going to be deciding an issue involving, federal legality of medical marijuana in an insurance context, and it will comment on Schedule I issues. And I think that, you've got the Thomas wing, Federalist wing that is now seemingly on board with the idea that they're going to allow greater access. So how will that tie into the Controlled Substances Act and what's happening in Congress? We're going to have to see. But I think that the decision, I'm hoping, will provide lots of sort of, greasing of the wheels in Washington. So keep an eye out for this. It should be coming out, I would think, in about 2 months or so. Next slide, please. The other big issue, and this is a circuit court case, so it's the appellate court coming out of Maine. So it's the First Circuit, and it is involving the Dormant Commerce Clause. And I know that when people say this, lawyers have flashbacks to law school and their hearts start palpitating, and everyone else goes to sleep, because the Dormant Commerce Clause is not the most exciting issue, but it's really, really important for the cannabis markets and something that everybody should be aware of. And so for those of you who haven't read up on this, I encourage you to Google Robert Mikos, M-I-K-O-S. He's a law professor at Vanderbilt who has written some great papers on this and done some good work on it. But basically, the Dormant Commerce Clause is a construction that the Supreme Court has created around the U.S. Constitution, which basically says that only Congress shall regulate interstate commerce, and the states cannot, enact laws that disproportionately impact interstate commerce. And so the reason why the Dormant Commerce Clause is becoming an issue is because many states have residency requirements or other requirements for state-specific barriers keeping non-residents out of their markets. And so the courts are now striking down, or expected to strike down, some of these regulations and paving the way for an interstate system for marijuana. So this is another case, I think, that is going to be very influential for how interstate commerce and marijuana will be developing over the next year or two, and it's something to watch out for. Next slide. And then the last topic I wanted just to briefly hit was this little notice, but I think also important develop in New York, which has happened in the last few weeks. So Governor Hochul signed a bill that will allow hemp cultivators, licensed hemp cultivators, to basically be first in line or at least eligible for adult use cannabis licenses. And so this is the first time we've actually seen a formal crossing of the line between the hemp markets and the cannabis markets. And some of you may have seen that in California, we had Assembly Bill AB 35 that was signed in the fall. And in that bill, which loosens the restrictions around hemp-derived products, including CBD in California, the state agencies were directed in that bill to study this issue, to study how do you potentially create a stream of commerce or a channel of commerce between hemp and cannabis and vice versa. Can cannabis licensees sell hemp products and vice versa? So California will be looking at that and perhaps developing new regulations in the next year or two. But New York, I think, is this is a big development. So it's something again to watch out. And as you're advising your cannabis and hemp clients, particularly in the Northeast, I think you're going to start to see more and more crossover. Now, the big issue that I have here is that hemp operators, operate very differently than cannabis operators in terms of the regulations and all the attention to detail. And I'm not saying anything bad about hemp operators, but it's a whole nother thing to be an adult use cannabis cultivator. And so, I'm hopeful we'll see that, this goes smoothly, but I do expect that there are going to be, some challenges perhaps where, some hemp operators say, okay, great, we can grow cannabis. Well, not so easy. But stay tuned on that. So I think in the interest of time, I think there's one more slide here. Yeah, and so we've put up here a few recent papers from our team on on-site consumption. I know there was some interest about this controversy in Michigan involving product liability, mandated product liability coverage from admitted carriers in Michigan, which is causing some problems. So if you want to take a look at that paper, there's additional info for you. And then finally, the issue of hemp-derived Delta-9 products, intoxicating hemp-derived products and the risks associated with those. So with that, thank you very much for the time. I really appreciate it. And I'll turn it back over to Jim.
Ian, that's awesome. Thank you. And Cannasure intends to put that paper out, the Wilson-Elser paper on the state of Michigan in a e-blast next week, by the way. So thank you for the content and clearly a topic of controversy in Michigan. So we'll share that news soon. Mr. O'Rourke, please join us.
Thank you, Jim, and hello, everybody. Thanks for joining us today. I would like to talk a little bit about claims. As many of you know, I'm the underwriting manager at Cannasure, but I'm going to talk about claims. We look at claims all the time. We want to learn as much as we can. And I thought it would be a great addition to the panel here to just take a few minutes, a short amount of time to kind of give you a few reminders, give you some updates on what's going on, some things that we're seeing, and some facts and figures about the claims that have presented themselves in the 4+ years that we've been running this program. So Dana, I'll take my one and only slide. We go minimalist here. So some thoughts on claims. So what are we seeing? We are seeing, first of all, we're seeing a lot of claims that are not covered. Get to that in a minute, but somewhere around 1 out of every 5 claims that come in are closed without any payment whatsoever. And some of that is some BI COVID claims that came in. I think most people know where that was headed, and I think it's still headed that way. Those are not covered. We of course have the ISO virus exclusion on the property, on all of our forms or what have you. So, in general, I will say that the claims which luckily are minimal in number, to characterize them would be that they are more of a severity thing than a frequency thing. The top three claims are all fires, and they are caused, either directly or very much in part to lighting problems. That's why I think we're all very excited to hear Lyn come up next behind me with some facts and figures about lighting. Lighting caused fires are really the problem. That's the headline for claims today. So, we are going to be pushing from an underwriting standpoint even more for LED lighting, and we will be scrutinizing even more the non-LED lighting, in the cultivation facilities. Of course, LED, lumen for lumen, LED is going to be a little bit more expensive. However, with the cost of power, perhaps at the lower consumption that an LED array would have, perhaps there's a better break even. So we're hopeful that cultivators are being encouraged to, as they naturally switch over their lighting, these things have a certain lifespan, that they choose an LED setup going forward. So a little bit about claims and underwriting kind of mixed in there. My second point says understand some of the current coverage limitations compared to what's available. So getting back to the 1 in 5 claims that are closed without any payment whatsoever, as the brokers and agents in the audience understand, this coverage, it's E&S, it's a lot of it is got a heart of ISO, so it's standard in that way. But then we kind of load up some exclusions. We've got some limitations when it comes to buying down wind and hail deductibles to regular AOP deductibles and what have you. So, the form set from carrier to carrier, program to program is, significantly non-standard. And so understanding some of the limitations that we have, across all the various markets is helpful when it comes to, setting expectations for claims and what would be covered and what wouldn't be. When I said that, we do have a number of exclusions and a number of limitations in the form set, of course, what is the same is, your typical building coverage. We at Cannasure, we write an occurrence form on the general liability for the premises and separate the products out because we want to go claims made. So there are some similarities to what you would call maybe the regular market, the standard market, the non-cannabis market. But understanding the limitations and some of the coverage shortages, I think, are key to making sure that claims administration is handled properly. I'll close with some claims submission tips. And an underwriter handling a claims topic cannot resist inserting some underwriting in here. But I'll just say this: insurance to value. And the second thing I want to mention is insurance to value. We still have coinsurance. So if there's anything I can tell you about claims is make sure that you do not get sideways with a coinsurance penalty. At Cannasure, our business income and our industry property coverages do not have coinsurance, but building, BPP, tenants improvements do. And so please, insurance to value, that if you are insured to value, the claim that you're about to submit will go a whole lot smoother. So have a sense of urgency when submitting. One of the things that we have found is a bit of a lag problem with claims submission. We want to make sure that these claims are being handled, especially the casualty claims, that these things are being picked up and handled by our carrier. Cannasure does not have a TPA. These are all handled by the carrier on our main program, TOPA Dorchester. But a sense of urgency when submitting, especially on a casualty claim, is essential. Again, managing those expectations, understanding the limitations, understanding some of the coverage shortfalls that come up is also key. And then be clear on, when you submit that claim, be clear on who to contact. Sometimes that little detail will cause just unnecessary delays in getting to it. Oddly enough, about 2 hours ago, we had another claim submitted that came in, and I already saw something from the carrier's claim department where they were questioning something on the notice of loss or what have you. So My point here is that the carrier gets on these things right away, but a clear who to contact, is essential in that point. That can be handled, and your client can be contacted immediately. We all know that sometimes, a lot of times, this is the only time that a policyholder will have contact with their carrier. So, who to contact is very important. So, with that, I want to turn this over to our next speaker, Lyn Baer, and I can't wait to see this her presentation on lighting and risk management.
Thank you, Kieran, and good afternoon and welcome. As you know, my name is Lyn Baer. I've been in the loss control and risk management field for about 20 years, but this cannabis stuff is kind of new to me. The one thing that I want to back up Kieran with is that the losses are more prevalent in the lighting areas. So as business changes, our focus on different areas of loss control has to change. And I want to start with kind of giving you a little background about the types of lighting. So there are two lamp families that use what they call ballast, fluorescent and high intensity discharge. Next slide, please. There are two types of ballast. One is called a probe start ballast. They're an older type and they're not very easy on HID lamps. So the lamp change out has to be more frequent. Electrons actually jump across the arc tube. So now you've got electrons moving, and that is exciting the gas inside the lamp and making it light. The problem is that it takes a long time for this thing to light up. And then the restrike period is a lot longer. So if they go out, if they turn out on a cycle, when it comes time to restrike or relight, it's a longer period. Okay, next, please. The second kind is a pulse start ballast. They don't use a starting probe. Instead, they use a high voltage igniter. Now, I mean, if you think about it, you've got this high voltage igniter. It is open electricity. Anytime you have open electricity, electricity is going to follow the easiest path. So with that being said, if there's any kind of wiring deficiency or if there's any kind of possibility of a secondary arc, now you've got something that might cause a fire. Using these type of ballasts can actually extend the life of the lamp, so the lumens don't depreciate as fast. They are more energy efficient than the older probe start ballasts. Next, please. All right, so I want to talk about LED versus the old style lighting. LEDs have a lot of pros. First of all, they're energy efficient. They produce lower heat and they normally have a longer lifespan. The LED light source can be beneficial if they're maintained properly. They are less maintenance, but they still absolutely need to have a maintenance and inspection program. Next, please. So growers tend, from a risk management standpoint, growers tend to take these LED lights for granted because it is a superior lighting technology. It is less likely to need maintenance. So actually the grower ends up taking for granted the maintenance cycle when it comes to maintenance and change out and inspections. Inspections is a huge part of what a maintenance person in a grow should be concerned with. Next, please. So LED lighting, is thought to last about 50,000 hours. However, there's a long-term degradation of about 30% or more over that 50,000 hours. So to keep those bulbs emitting the best service and giving the best service and maintaining the proper lighting levels, they need to be changed more frequently than that 50,000 hours. that is essential to keeping your prospects' plants healthy. Okay, next, please. However, here's the deal. The cost of changing to LED light fixtures can be expensive. They produce less heat. So not only are we looking at the expense of the change out itself with the LED banks, but now we have to consider possibly a change out or upgrade to the HVAC systems. And that's going to be pretty expensive. So growers are probably hesitant to go to an LED light source. Thing of it is that they actually can adjust height to the top of the plant. So when you're talking to these guys and they're changing out to these LEDs, just kind of make sure that they haven't, they probably do have an idea about the heat source. Okay, we're all set. Next. All right, so when you're talking to them, you have to kind of understand the pros versus the cons. So the cons are the expense, basically. In a perfect world, we would never have a claim. There are significantly less claims when LED lighting is used. So over time, the pros do outweigh the cons in terms of a longer lifespan, reduced maintenance, and energy costs. And you got to look at the fewer claims. So when you have fewer claims, you're going to have a premium that kind of stays pretty much steady. I mean, there are ballast surcharge, and if you read about or go to the Cannabis program, you can see their ballast surcharge. Next. One of the things that we're seeing in workman's comp is workman's comp claims that are from older growers, and that they are using these high UV light sources. Skin cancer is one of the claims that we're seeing. So when you're, from a workman's comp standpoint, LED lighting emits a lower amount of UV rays, and they're thought to be more safe for the employees. Next. So bottom lines matter. The ultimate choice for the grower is going to be the quality of the product that they are offering to the customer. Bottom lines matter because profitability matters. Better lighting, more consistent lighting, and better control means a better quality product. You've got that better quality product, your customers aren't going to be going looking for another product. Next, please. So risk management is done on all levels. So from my standpoint to the agent standpoint and all the way up the line. Agents are really the front line for management of these potential clients. You guys go in, you look at it grow, you come out, you have all this information, and that information has to be accurately conveyed for a quote. So you have to decide whether the risk is a good risk or is it a marginal risk. And that falls on all levels of insuring the client. So you're going from the agent standpoint and you're going to underwriting. Every potential client is a potential claim. So as a risk manager, myself, and you as agents, we need every possible tool for loss mitigation that we can muster in our toolbox. I would consider using an agent checklist for identifying claim possibilities. Cannasure is going to send them out along with the recording of this webinar. Next, please. All right, so I want to talk about root cause. A lot of times when we talk about root cause, we're talking about the human element, the root cause of an accident, what happened. Root causes are really important, even from a standpoint of this lighting issue and these lighting claims. Your client may have had a fire. It may have been a ballast that caused it. However, that might not be the true root cause. The root cause is that they were using equipment or materials that are known to cause these type of complications. So from a risk management and safety management perspective, all claims need to be investigated to the fullest extent to find that root cause and keep the incident from reoccurring. So if you've got somebody who if you've got a client who's using the old style lighting and they have a fire, the next step is how not to have a recurrence of a claim. Recurring claims cost on the bottom line. Next, please. So I hope the information that was presented today helps you to understand the mindset of a risk manager. It can be frustrating, and I hear it a lot, because even the insured, I always give my information when I'm out on an audit. I always give my information to the insured. I get a lot of phone calls. Why did you do this? So it's not only frustrating for the insured, but it's frustrating for the agent when an underwriting report is generated with a series of recommendations that are beyond the scope of what the insured is willing to do to mitigate these losses. Next, please. Keep in mind, we as risk managers and risk auditors, we do not want to take the insurability out of the realm of possibility. The only thing we want to do is make your insured not the best insured that they can be. And it's always a good idea from an agent standpoint to make sure that your insured understands the function of a risk control person or a risk control auditor. It is not to tear down your client or their operations, but it is help to make them more sustainable. This is a fast growing industry. I look at what's happening in New York State, which is where I'm originally from. There are grows going up all over the place. And we want our clients to be more sustainable in this fast growing industry where the competition is fierce and getting more fierce. Next, please. So with more and more states legalizing hemp and cannabinoid products for medicinal purposes as well as recreational use, there are more and more growers. We want your growers to be profitable and sustainable in this market. If you have any questions, there is a Q&A at the end, and thank you all for having me.
Thanks so much, Lyn. Let's jump back to builder's risk, Adam, and the question that we had on the table in San Francisco, if you could address that one for us, and perhaps read it if everyone can take a look at both the chat box and the Q&A box and make sure we're on the same page.
Yeah, Reese had a question about, kind of a typical retail setup in San Francisco. Had a tough time finding a carrier that would do certificate of occupancy because there was habitational exposure above. And that is a tricky exposure. So there's a lot of things that would depend. What are your adjacent exposures? When you're looking at a builder's risk, it's maybe a parcel inside of a bigger, strip mall, or in this case, it sounds like retail on first floor and habitational above. You kind of then, as a builder's risk underwriter, we have to look at what's our full exposure within that building. So now you've got exposures that are outside of your control that can lead to a potential loss to your customer there. And that's what we're looking at from the underwriting side, from a builder's risk standpoint there. To answer your question, yeah, that is a tricky placement, and there's a lot of things that depends. What coverages are needed? Are we looking to cover that existing structure along with the build out? How big is the project? There's a few things at play there. So I will say it's not a hard and fast no on an exposure like that, but it's definitely more difficult.
Gotcha. Thanks, Adam. And I wanted to make one comment before we turned a couple of questions over to Kieran. Lyn had created a number of additional slides on ballasts that we are holding back for the handout. So I know Dana had shared, or someone shared, that we will have all of our slides shared at the end of the presentation. Hopefully pretty soon we have everyone's email addresses through the registration. So within today or tomorrow, we will make sure that we compile the slides that are being presented plus Lyn's additional slides that were on ballots that you guys haven't seen yet. So that'll come out soon. Kieran,
Jim, may I, before
go ahead,
we
Ian.
leave the issue, oh, sorry to interrupt, but before we leave the issue of ballast, I wonder if I may make a comment and then ask Lynn a question.
Yeah.
On bulb ballast incompatibility, because so Lynn, what I've seen, and I'm interested in your perspective here, is smaller grows, right, that don't have multiple rooms where they have different rooms for the different vegetative stages of the plant's life cycle. So instead of moving plants through those different rooms where the lighting's already set up, they're changing the bulbs that are suitable for the different stages, and there can be bulb ballast incompatibility, and there's been fires. And so I'm wondering, what have you seen that, and what are you advising folks to do about that? How do we just switch to LED and that's the solution, or is there another solution for bulb ballast incompatibility?
I think the solution is these growers need to do their research. Unfortunately, they are not. They're not doing the research enough to know that different ballasts are used for different types of lighting. So in that case, in these smaller grows, maybe we could put together something for from a maintenance perspective, so that when they are changing these lights out, they know what they're looking for. I can work on that and possibly, get something out there that would help to educate. I mean, really, before this whole thing started, I had no idea that, different ballasts go with different lighting. My husband's an electrician. I'm the kind of person who shuts the main off to screw in a light bulb. Electricity just kind of like freaks me out. But either way, I think the biggest thing on that would be, education and research. Possibly, like I said, we could put something together. I do know that the ballast handout has some of that information in it.
Thank you.
You're welcome.
Kieran, you want to jump in?
Yeah. Did you have one that was in that you wanted to ask first, or you want me to just jump in with some of the stuff that I've seen?
Yeah, the however you want to go.
Yeah. So
4 or 5 questions on the Q&A.
Yeah, there was a question about what are some of the other denials that we have had. I mentioned BI claims for COVID. Some of the other things that we had seen, were things that were completely outside the scope. We had a risk that hired a mover, and the mover was they were bringing the copier down the steps and they dropped it. We got that one. Another one, their payroll company scammed them out of money. So there was a certain group of that flavor. The other group is thanks for your claim, but you didn't buy coverage on living plant material. Kind of like, sorry, but you didn't buy coverage for that particular item. And then there was the under the deductible. Things get, they get sent in. We have high deductibles. We have a deductible on product liability. Sometimes it's not as bad as it looked, and it falls under the deductible and it gets closed. And then the third variety would be, for instance, we had a dispensary there, a delivery truck backed over their or knocked their sign over. And, while there was very clear liability and coverage, I think the speed at which the delivery company was handling it, and the business income that was perceived to have been lost because there was no sign, that came to us. So that kind of makes up that general area of closed without payment. We had a question about the loss ratio, that we're experiencing. We really can't disclose the actual loss ratio. It's good, but I say that I have to disclaimer that a little bit. Look, as a a longtime underwriting and insurance guy, I just don't think that our collection of claims rises to the level of super credible just yet. I did say that it was spiky. It was we did have a couple severity pops there. The civil unrest on Memorial Day 2020 didn't exactly treat us well. But overall, I think that everybody involved is, they're happy with the performance of the program or whatever. These are, and I think Ian can easily attest to this from his attorney standpoint. Some of the forms we're using are new. They're not out of the ISO manual. So, we're still early, and I would hate to start crowning ourselves loss ratio leaders or whatever when I just don't think that we've seen enough. So probably just a little bit of underwriting pessimism there. One other thing that, Jim, if I might add, we're talking a little bit about lighting here, right? And I said that our big pops were lighting related, and where we might be moving from an underwriting standpoint accordingly. And I would envision a mix of credits, pricing credits for the use of LED, and perhaps surcharges for non-LED use. Now, we want to remain a market for just about everybody in all the states that we do business with this program, or really any program at Cannasure for that matter. And so we are not fans of making knee-jerk reactions or things that are going to be unduly disruptive to the market. So remaining a market for everybody is going to be key, but between perhaps some surcharges for non-LED and ways to mitigate those surcharges would include make sure that your suppliers and manufacturers have presented you with a certificate of insurance. Don't buy lighting of any kind off of anybody that doesn't have a certificate of insurance saying, hey, if something goes wrong, we'll be here. The other thing about lighting is not so much the lighting, but it's what is holding up the lighting. Our very first claim in the program involved a broken chain. I've told this story about 50 times. We reproved the saying that a chain is as strong as its weakest link. And that was claim number one in the program back in 2018. And while the light hit the table and sparked and caused the fire, the proximate cause was a broken chain. So maintenance, COIs from your suppliers, and a schedule of replacement for older lighting arrays are going to be keys to mitigating whatever surcharges may or may not be if you've got all metal halide or all high pressure sodium or anything that is non-LED.
Kieran, I think those were all great points, and if I can add one more to the list for focusing on, which is, and this usually happens during the local permitting period, unless you're in a state like Oklahoma, maybe that doesn't have quite as of a robust process, but it's understanding the design load for the building, especially older retrofitted buildings. We see this in LA a lot. Older warehouses that are not meant for the design load for the electrical load, and there are fires there too. And so that's an area where, again, usually the city or the county is gonna look at that, but it's a huge problem.
Yeah, thanks for that, Ian. You're absolutely right. On the East Coast, the Boston area, gentrification is there's nowhere to build, right? So towns are, from Holyoke to Fall River are getting, revitalized. And yet that is a key to making sure that your renovation has gone correctly, is loading that thing properly with the electrical service. Thanks for that.
And do you have your hand up?
Yes, I wanted to go further with Kieran's comments about the lighting, what's supporting the lighting. When I go out into these grows, I take a look, that's one of the things I take a look at. What are they using? Are they using things that are not going to corrode in a moist or a humid environment? And break. They make plastic coated, they make aluminum. So just from a risk management standpoint, that's a biggie. The other thing, and again, speaking to the electrical, on these retrofits and like that, one of the big questions is, hey, when was the last time that this electrical system and service was actually updated? If it was 10 years ago or 15 years ago, and they're just putting in, new renovations, that might be a red flag. And that was just the comment I wanted to make, further with Kieran.
And some of these old warehouses, it could be 40 or 50 years ago. I mean, it's possible.
Absolutely, absolutely.
Larry had a question that was on actual and real claims history. I think, Larry, that's a industry issue, not a cannabis issue, candidly. I've seen in my history a number of policyholders choose to self-insure and not bring claims forward for fear of a price increase at renewal. I don't think that's a cannabis conversation. And I think it's a reality that you bring up that probably no one in the insurance industry sees all of their claims, because I do know that there's a lot of, risk transfer that's not happening because they're just eating the claim at their own cost. Kieran, do you see the question on product liability claim denials? Do we have any experience there?
Yes, in fact, we do. Just to give you, we've been very fortunate so far with our product liability. I'll just preface with that. I'm sure everybody in the audience remembers the so-called vape crisis of 2019. That kind of put a little bit of a scare into all of us. We took a couple there. Those were maybe further examples of things that were closed without payment. As we know, that was almost completely a kind of a black market, not our guys kind of event, luckily. So we had a couple there. I think if I could sum up the rest of what has happened, it would have to do with perhaps a packaging dosage, full disclosure type thing that that was a problem with understanding the dosage, whether it was spoken or whether it was on the package itself. And another one was something errantly got put in the bag that I think the insured, or the claimant, I should say, claimed that they didn't buy this. It got put in the bag erroneously or what have you. So there was a little bit of a mix up there, but we have been very fortunate so far. And I put all the credit. You thought I was going to say underwriting. I'm not going to say that. I'm going to say we have an amazing industry here that really does a good job. I mean, and again, I gush a lot about not only our policyholders, but all the policyholders that we want to write. And this industry has done such an incredible job of handling its own risk, and our product liability experience would speak to that.
Beautiful. Thanks, Kieran. Edie had a question. I just typed out a note about asking for an expansion of it, but the question was, does medicinal versus recreational have an effect on workers' compensation? If you're talking about usage at the job site, if that's the angle, if you're using, cannabis legally or illegally, or with your license, with your medical card or not, I mean, I've seen some claim denials because it's considered under the influence, but I can't speak exactly to the depth of your question. So if you can expand that, Edie, we can answer that question offline. Just want to make sure that we're hitting on it. So you might be going in a different direction than I'm thinking. Linda's asking a question about how long has our program been going on. Cannasure has been around for 11 years, and our MGA program has been around, thank you, Kieran, since 2018. And I know we're up against an hour, so my email is on this last slide here. Anyone in the audience, I guess we'd say that, is welcome to contact me for any questions we didn't get a chance to answer live. I truly want to share my appreciation for all of our panelists who did a fantastic job of sharing their information, their industry experience, the claims information, or the decks that we'll send out will be coming soon, as I shared, and it does include Lyn's lighting checklist. So there you go. And a final comment, as Lyn had made on her slide, that Canopius program does have a surcharge if they're not seeing an LED light. So there is insurance coverage that is being, surcharged or increased based on lighting today. So that's out there in the marketplace. To everyone else, thank you for the audience participation. And we look forward to the next time when we're probably going live late April, early May with updates on Cannasure's flagship MGA program. Have a great day, everybody.